Hey everybody, this is Jose. We are about to get started. Just need a quick sound check, if that's okay. A quick message on the chat box would do, so I know you hear me well and all is good. Please go ahead and do that. As always, I will turn on the video stream in the meantime, and we'll be ready to go. How are you, my friends? Hello here from the bottom right corner of the screen. Wonderful, everybody. Okay, wonderful. I see all is good. Perfect. Thank you so much, guys. Mark, Joe, everyone. Thank you so much. So, disclaimer before we get started, the following videos, clips, demonstrations are for educational and instructional purposes only. Please read it carefully. This is important information. I always highlight it on the upper left, isn't it? Today is December 12th, 2021. My name is Jose Blasco, and this is a top session. So we're going to be talking about top as a platform. So we'll be discussing how it works, how to use it, etc. Many times it's impossible to separate the use of the platform with let's call it lecture time for trading. So we need to talk about trading techniques, trading specifics, and we combine it. And then, of course, always happy and ready to get your questions and provide you with answers and anything else that you guys may need. Just go ahead and speak up, use the chat box, be ready to participate. Do not be shy and go for it. So here is top. Okay, here we can see top, and in the prior session we continued our discovery of studies, and we're gonna continue from here as well today. Okay, so the last study that we covered that we talked about how to use is the options volume map. So today I'm just gonna jump into it. We're gonna start discovering and discussing Parabolic SAR, and then the pivots, probability cone, and probability envelope. Those are the items that I would have as a goal to cover today, and that would basically conclude all the studies that could be added on top as an overlay. If you recall, I'm just gonna open a chart and maximize it. So this is just a brand new chart. So if I again right click add studies, you probably remember that all this upper portion, okay, all these studies above this horizontal line, they are basically plotted on the upper part of a chart, meaning as an overlay, such as the AutoUFOs, which we can see here. All the studies that are located in the bottom portion, those would be studies that go in a subgraph. For example, we'll talk about this properly when the time comes, but if I was to enable AutoClimate, notice how this is now displayed as a subgraph, not as an overlay on top of the charts. Okay, so we are basically about to conclude all the studies that work as an overlay, and from there we would then move into subgraph studies. Okay, cool. So with that little recap slash summary, let's begin with Parabolic SAR. And before I do, let me go ahead and clean this chart so there is nothing in it. So I'm just gonna right click to remove all studies, because as you can see, we have the AutoUFOs, right? So I'm just gonna remove everything and go back to right click, add study. And the next study I will enter is the Parabolic SAR. So Parabolic SAR comes with specific settings. We can talk about this later on. It also comes with a marker where you can change the color. You can also change its symbol. So far, I'm just gonna leave it as it comes, based on the default settings from factory. If I click OK, so here is your Parabolic SAR, where you can see all those dots that are being plotted at this moment in time. Okay, good. So what does this indicator represent? How can it be used, etc., etc.? And then what happens when we vary the settings. Okay, well, first of all, if I was to zoom in and I was just to pick a specific clear move, in this case a move to the upside, which I think that the clearest one in the chart is right here. So you can see that we activated Parabolic SAR with the basic parameters, and notice how these dots are being plotted as something that follows price. If I was to use the training mode and rewind the market until this candle, which is where the first dot appeared. Okay, so notice that the reason for this first dot to appear is because the current candle surpassed the last dot that was on the other side. Okay, So when you surpass the last dot from the other side, then that is telling Parabolic SAR that a new change of direction took place, and therefore the dots should show up on the other side. And in case you are not guessing it, I haven't said it, but you may be guessing it because it's quite visual. So you can see how those dots follow price as a move happen. So a typical use of Parabolic SAR is for some sort of a technique for trailing stop. And again, if the last dot was to be traded through, then the new dot appears on the other side, because now you're going to be following price in that new direction that basically violated that last dot, in this case on the upper side. Okay, same thing happened if I was to rewind to the opposite condition. Okay, so at this moment in time, you can see we're in an up move, up, 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 and then the next candle goes below that dot. So because it goes below the dot, so Parabolic SAR now understands that there is a change of direction, and then a new dot appears on the upper side, ready to follow price. Assuming price was to continue falling, that dot would continue following the price, and it could be used as a location for a stop, which is a trailing stop based on these Parabolic SAR adjustments or parameters. So notice how the market goes down, goes up, goes down, retraces, goes down. And notice how the beauty of Parabolic SAR is that it allows for sometimes pretty powerful retracements, but doesn't take you out of the trade and allows you to continue the move, basically staying on board with the opposition still on and profit potentially more. Okay. So it's a pretty interesting tool in that case. Now, having said that, I will add as a comment that right now I am showing you Parabolic SAR applied to the S&P, which at the time of this recording, we all know the S&P is a market that since 2008 started, well, since 2009, I should say, started going up and never stopped since. You have some changes of direction. I would highlight the one in 2020 with the pandemic, where the market dropped significantly. But in the end, next thing you know, back on board, back in an uptrend, keep going. So again, I'm not saying this is going to be for the rest of his life, but certainly in a market that is such a trending market, Parabolic SAR will do a very, very good job at trailing stop and helping to maximize profit by trailing stop. At the same time, if the market that you trade is not trending as clearly, then Parabolic SAR, depending on your settings and your adjustments, may take you out of the trade, and you may end up missing a lot of the profit or exiting way too soon if your parameters are not adjusted accordingly. Okay, so again, you have the pros and the cons of technical indicators, which are generic indicators, okay, which are based on prior candle information where some calculations are performed, and you always have this lagging effect, which again, you are basically in the hands of whatever parameters you decided to use, because all indicators, I would go ahead and say that all indicators are great ideas and great thoughts and great implementations of an idea that could potentially help a trader, but in the end, depending on the parameters used, that indicator may work very well or not, and that depends on the market conditions, which are changing all the time. So just be careful with that. While the examples I'm showing you here on the screen are very powerful, it doesn't mean they're going to work all the time. Okay, so just make sure that you do your homework. Maybe it's no need for me to say, but definitely I want to make sure everybody understands that. So going back to settings, if I use Parabolic SAR and I was, for example, to use an increment instead of 002, 001, okay, and I click apply, so notice what happens, okay, everything becomes a bit more generous and relaxed, okay, and you got a little bit more space between price and the dots, which potentially allows for less situations where you get stopped out and then the market continues, but you're not on board. So that could be an advantage if I make it a bit smaller. Okay, look at that, even more distance. Okay, and again, the beauty in this case is the advantage in this case, I should say, is that you are likely going to be stopped out less often. At the same time, the problem is, for example, if you look at this move to the downside, okay, with the setting 005, you would be stopped out at this price point, which is around, let's call it 440, let's call it 442, just out of simplicity, 442. Okay, Where if I was to go back to the original setting of 002 and I click apply, you will still be stopped out here on this candle. Okay, that would be the moment when you get stopped out. And in this case, you got stopped out at 439. So in other words, you would have made a greater profit. Okay, but other cases you'd be stopped out and then the move continues and now you're not on board. So again, what's the best setting? Well, your backtest, your trading plan, and so on will answer that question, knowing that we cannot predict the future and future market conditions will always be different than past market conditions to a certain degree, and therefore there is no magic setting that will always work. So I will just leave it here and invite you, if this trading idea, this parabolic SAR trading idea sounds interesting or appealing to you, so I will just leave it there to you to test and practice with and so on. Now, the conversation we had so far with Parabolic SAR is the classical use, which is utilizing Parabolic SAR as a tool to trail stop and therefore to be used as an exit. But you could argue that using Parabolic SAR as an entry could also be another way to approach it. Okay, you could say, okay, that's I'm going to use it for entry. Okay, and how can you do it? Well, some traders may consider a trend has changed when Parabolic SAR changes, and therefore, if you were to be a very basic trend trader, what I mean by basic is that in our trading style with the tools that we have, we normally always use AutoUFOs, right, to time the entries and the exits, to know the prices at which we buy, to know the prices at which we sell. So now let's pretend you don't have that, okay, and you were to have a very basic trend analysis. So for example, at this moment in time, when the new dot happened on the opposite direction, so now you would go ahead and say, okay, I'm going to be a buyer, okay, and now you would buy here. And because in this case I'm assuming you are a trend trader, you just take the trade the moment the trend defines itself. And if you were to use Parabolic SAR to define a trend, so that would be your entry. Of course, if you did that, you would have to see price go against you by a lot. You may get out of the trade, or you may have resistance and stayed in it. And if you did, well, in the end, congratulations, because the move was significant. But it's not going to be like that all the time. There will be times where you will take the trade, and given the lack of precision with entries, so you may end up, in a problematic situation. Okay. So another way to think of Parabolic SAR is, again, for entries, apart from exits, but instead of making it as basic as I just defined, which is, you have the change of trend, go for it based on the Parabolic SAR. So a much more precise way to do it would be to utilize AutoUFOs, right? And how can you do that? Well, for example, here, at this moment in time, right? So at this moment in time, you have Parabolic SAR that have changed, okay? And here's a UFO, so now you can go ahead and take this trade, okay? Now, I would say that not a very good idea, given the fact that at this moment in time, we can see in this particular time frame, the daily time frame of the SPY, the probability is quite low. So, while you have this break of the Parabolic SAR, which means price has been falling significantly to the downside, and buying low may be a good idea. Well, this may not be a good idea, actually, because that's only 43%. So I would suggest, if you're going to do something like that it would probably be better to look at time frames that provide a greater statistical performance. For example, the 55-minute time frame and intraday time frame, which is providing 57%. Okay, this could be potentially more interesting. Okay, potentially this could be more interesting, and now you can go ahead and find your opportunities that may allow you to take the trade. Okay, so now this of course will depend on where your UFOs are, and also let me explain this in a way that is well understood and powerful. So for example, here you can see there is a very strong move down. Okay, so price traveled a lot in the direction, okay, went all the way here, and from there had to travel all the way to break this Parabolic SAR dot, right? So you would argue that price has retraced a lot, and from there a change of direction to continue the trend to the downside would be expected. Okay, so if there was to be some UFO here, you would want to take the trade. Okay, now was it a UFO at that moment in time when that dot was traded through? So let's find out. No, there was no UFO at this moment in time. The UFO was way higher, but not at this point. And therefore, taking a trade here, expecting it to drop, even though, we went beyond that dot, would not be advisable because there was no UFO. Okay. So, you will need to filter out. Okay. You would have, let's call it few trades only if you were to apply this technique. Certainly it could be powerful, but for it to be more powerful, what I would suggest as well is to work with settings of Parabolic SAR that make those dots not to travel too close to price. So basically, it's kind of like looking at situations where price had to travel so much more in that direction, maybe all the way to this UFO. So now, you are more likely going to get a turning point because price is likely very exhausted in the opposite direction. So let me do that and see if we can find a couple of good examples, or maybe not. We'll see. So edit Parabolic SAR. Okay, so in this particular case, we're looking at an increment of 0.2. Okay, also the start is 0.02 with a maximum of 0.2. Okay, so all of this dictates how those dots are being plotted. Again, if I go back to what I was doing before and I was to add another 0 in between, and I click apply, so notice how now, those moves, okay, are very significant. So for example, here at this moment in time, you can see this candle going down is breaking the dots. So let's see if we have a valid example. Okay, so price is coming here. Now question, do we have a green UFO? Yes. So we have a green UFO right below. So, notice how price, okay, price, sorry for that, guys. I just hit the wrong key combination. So notice how price has been traveling all the way from here, all the way to here, right? So it's a pretty exhausted move, okay? You see all those dots here on the top, right? And from there, price was traveling aggressively in the opposite direction, and now is breaking that dot, okay? So what does that mean? Well, now that, while there was a pretty strong trend condition, very neat trend condition in place, you had an impulsive move on the opposite direction, which this is what this is telling you. So potentially a change of trend. And now you got a pierce on the opposite direction, okay? So again, if we were to go back to Elliott wave theory and things like that, so you do a wave count, and this would potentially indicate a potential change of direction for a new trend on the opposite direction. Again, all of these are possibilities that add odds to the traders, but then you need the precision for entries, okay? And in this sense, now you can have your UFO. Sorry, guys, I just hit the wrong key again. Here we go. I just wanted to hit 1. Okay, so you can see how price went exactly where the UFO was. Okay, the UFO is gone because all those on-field orders got filled, and the reason why you can see how this candle went that high. Okay, so that was a very, very huge amount of orders filled. But notice how that was a change of direction, where from there the market went, created a totally new trend. Okay, so again, this is exactly the story I was explaining. You had a long-term trend, long-term, relatively speaking, depending on the time frame you use. So you had a long-term trend to the downside, beginning of a trend on the opposite direction, thanks to an impulsive move that is giving you a clue that the wave count on the way down was getting to the exhaustion point, and now a new trend starting on the opposite direction. So again, different ways on how to assess your trend analysis, and again, you could argue that, going back to prior lessons that we had before, you could argue that these would be piercing the Bollinger Bands, and that could also give you an entry point in an exhausted market to the downside. Again, there are different techniques on how to conclude the same thing, but again, we are talking about Parabolic SAR today, and I thought of giving you a few more ideas for you to digest and potentially backtest and play with beyond the classical use of Parabolic SAR, which is trailing stop. Okay, so any question out there when it comes to Parabolic SAR? I'm gonna remove the UFOs. I'm gonna remove Parabolic SAR unless you guys have any question. Feel free to interact on the chat box. Do not be shy. Okay, because I'm gonna now move to the next one in line, which is gonna be the pivots. Okay, it's gonna be the pivots. But before, I want to make sure that all is clear with Parabolic SAR. If all is good, as always, you guys know, I would really appreciate a quick okay, a quick all good on the chat box. Anything, even if it's very short, just so I know you guys are with me. Mark, you like it for trailing stops. Very good. Do you use it yourself? No, I don't use it, Christian. I don't use it because, again, it works very well if the market is very trending. But when the market is not very trending, it's actually very disappointing, or you go crazy with settings. And yeah, that to me is subjective. If you keep changing settings, it's subjective. So I prefer to trail stops based on UFOs, or lock in profits in a trade by tweaking the option strategies, as you guys see me do in the Wednesday and the third sessions, isn't it? And I prefer to do it like that. But again, it's not a silly tool at all. Like most technical indicators, actually it's a very smart concept. Just happens that it has the pros and the cons of indicators, and I prefer tools that work based on stats, such as AutoClimate, such as AutoUFOs, tools that are basically predicting what is likely going to happen based on probabilities, instead of predicting what's going to happen based on settings, which you may change because of what happened in the last 2 days of trading, if you were to use it. So I personally don't use it because of that. It doesn't go with my trading style. But there are many traders, millions of traders out there in the world that use it. And again, it has many advantages, such as now you have a trailing stop. Now you have a mechanical rule on when to exit. So there is no overthinking or subjectivity on when to exit. It's very clear. If you hit that dot, you're out. That's it. Right. So again, it has advantages, and I would say for you to develop a feel for it beyond this mini lecture on Parabolic SAR and how to use it with top, I would say that you should go ahead and backtest it a little bit, and you will understand better how it works and understand if that fits your personality, trading plan, and so on. Because it may, and the fact that it doesn't for me doesn't mean it should not do for you. But again, that's my answer. Okay, Mark. For very long-term trades in real American, yeah, definitely. Why not, Mark? But again, now I'm reading between the lines that you are invested in equities for the long term, and of course you are benefiting from the long-term trades on the S&P, which have been there for many years. But it doesn't mean it's going to be like that forever. Okay, and I know that billions of traders and investors in the world will not want to hear that, and I'm not saying that's the case at all. So far, AutoClimate is saying it's going to continue. So I'm not saying the opposite is true, but I'm just saying market conditions could change in an instant, and they do change. Okay, I remember trading Forex in 2008, trading the pound against the yen. That was called the beast because that thing would move 450 pips a day. These days, you are lucky if you get 100 pips. That's 4 times less movement per day than what it used to be. So markets change. Is that making sense? We always need to be ready for whatever it is, and just make sure that you do backtest in various conditions. So for example, Mark, if you're going to use it for a long-term retirement account, my suggestion would be that not only you backtest it on the S&P during the last 10 years, but you also go back in time. For example, when the tech bubble crashed in 1999 and after, or when the market crashed in 2008 as well. So you do those backtests as well, so you understand what in a worse condition what would happen. Okay. Yeah, absolutely. Very good. Perfect. Okay, very good, my friends. A nice one. So let's move into pivots. Okay, let's move into pivots. And pivots is such an easy tool. And again, here you have settings. Okay, and the settings have to do with weak pivots and medium pivots and strong pivots. And the definition of weak, medium, and strong really has to do with how many candles back in time you went to deduct what's a pivot, right? So in other words, if you see the market that just keeps doing that and that, 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 and you look at every 3 candles and every little vibration like that, you call it a pivot because you are looking at every 3 candles, then those tiny turning points may not be that significant. Now, if you had something like that and then something like this, right? And that turning point took place 50 candles ago, and this turning point took place 20 candles ago. So those turning points are much more significant, and therefore the terminology used in the platform is strong. Another way to say strong is significant. It doesn't mean they are strong in the sense that they're going to create something. They are strong in the sense that they have a strong meaning. Okay, they are significant. That's what it means, right? So by default, the platform is coming from with a series of settings. Okay, The settings I prefer, I guess you're not surprised, is 5, 13, 21. Why? It's fib numbers. It's kind of like from 5 to 13 you have 8, from 13 to 21 you have 8. So it's, I would say, a fair way on how to separate those definitions of weak, medium, and strong, because it's the same amount of candles in between. But again, this is just my take on that. Just like the minimum percentages of move as well are 0, 5, and 8 for the same reason. And basically all those calculations, okay, have to do with, if I click OK, you'll see that all those calculations have to do with identifying, those turning points, okay, those turning points. So now, before I get deeper into this, in my case, okay, I'm just going to share a preference, even though maybe it's not the time to share preferences, but I'm just going to do it. So in my case, a pivot is a pivot. Okay, so even though they are defined as weak, medium, and strong, the way I look at them is, to me, they are all as relevant, which from a relevance point of view is not the case, but from a practical, pragmatic type of approach to trading, which goes with my trading personality, then yes. Okay, and that's why I color them all with the same color. Some of you may have, in the end, different rules for what is a strong pivot versus what is a weak pivot, and therefore, you can go ahead and color them in different colors. And now, whichever is orange, okay, will be seen as a strong one, whichever is not orange will be either weak or medium. So you can play with that, okay? In this demonstration, I'm just going to keep them all the same, but certainly you may have rules. You can even go extreme and be like, you know what, I don't care about weak and medium. I only care about strong. So you can uncheck those. And when you click apply, the only pivots that will be highlighted is what the platform considers strong, meaning all of these, even though there is something that looks like a turning point there, something that looks like a turning point there, something that may look like a turning point there. So all of these would be ignored. It would not be seen as strong enough because it's not implying this percentage of moves, this quantity of candles, etc., etc. Okay. Again, I'm going to go back to my preference, which is I'm just going to check mark everything to show all pivots, and I'm going to call them as equally important in my application. Feel free to experiment with other choices. And then when I click OK, so all those pivots appear. Okay. Now, once you got all those pivots on the screen, so what can this be used for? Okay, what can be used for? Well, this could be used for a collection of applications, to be honest. Okay, and again, the beauty, like everything we do and everything that Top probably inspires you to do, everything is all about having a mechanical approach to trading, taking decisions, and executing them. It's not about subjectivity. Okay, so for example, application number 1, trend analysis. Okay, so let's say you're a technical analyst using a classical technique on how to identify trends, and you define uptrends by higher lows followed by higher highs, and you define downtrends by lower lows followed by lower highs. Okay, or I should have said lower highs followed by lower lows. It doesn't matter. So if that was the case, so at this moment in time, for example, so you have a high, you have a low, you have a lower high. Okay, so those two are lower highs, and here is a lower low, so those two are lower lows. So now you would say you're in a downtrend. Well, bad luck, because then it changed to uptrend, but that would be your mechanical definition. That's a downtrend. Okay, that's a downtrend. Okay, now the moment a new pivot point, you know what, I just killed the chart, sorry, a wrong key combination. Sorry for that. Let me go ahead and remove studies and add pivots again. No, parabolic SAR. Come on, Jose, you can do more precise than that. Pivots, here we go. Click OK. We were looking at the 55-minute time frame, I believe. Yes. So now, right here, it's a new pivot created after this potential downtrend was proven to be wrong, right? So what would you do? Okay, at this moment in time now, you would connect this pivot with the prior high. Okay, and now what you have is higher highs. Okay, now from a low point of view, you still have lower lows. Okay, I'm looking at the most recent ones. Okay, so please ignore all of these. Okay, I'm just looking at the most recent ones here. So you still have lower lows and higher highs. So it's not an uptrend yet, but the moment this guy is now produced, So now you have higher highs and higher lows, okay? And therefore you're now in an uptrend, okay? Now, again, some more classical technical analysts, they need to see 3 higher lows and 3 higher highs to call it an uptrend. So you are almost in good luck here because you got 1, 2, and 3 higher highs. But unfortunately, with the higher lows, you have 1 higher low, second higher low, but then the next low is lower. Okay, so then you will need to wait for those 3. Okay, so higher, so that would be a low, and higher low no, number 1, higher low number 2. So now you have 3, and this, of course, still right here is still a higher high. So higher high number 2, number 1, and a higher high. So you have 3 and 3, and you would call this an uptrend, and a beautiful one in this case, but not always the case. Okay, trend indication based on highs and lows has its weaknesses, even though many certified market analysts in the world analyze trends this way, and therefore it is powerful because some of those things become a self-fulfilling prophecy because many people use it. So certainly it's a valid technique. And the problem of higher highs and higher lows is that different traders may call a high or a low a different thing. And the beauty of using the pivot study is that now everybody calls a pivot the same thing, and therefore subjectivity is gone, assuming you use the same settings. Okay, that's the beauty. Now, another application of utilizing these tools is for breakout traders. Okay, breakout traders. So let's say, for example, you are you are about to start trading the day. So let's pretend you are trading intraday. This is the S&P. It could be a stock, it could be futures, you name it. So the market closed there the next day, the prior day, and market opens today here. Okay, so what do? Well, you let the market do its thing. So a range defines itself, and a range defines itself with pivots. So right now you have a pivot here that just defined itself. So what would you do? Well, you would come in here and you would say, look, I have no idea what's going to happen, but if the market goes above this line, I'm going to take a breakout to the upside because I would assume the market is going to continue. Okay, so that could be a trading technique which is commonly used, which pros and cons. Of course, with no UFOs on the screen, you already know you have a certain disadvantage. But again, I'm just mentioning possibilities on how to use pivots without other tools that we have. I mean, I would love to use the volume map. I would love to use the climate. You name it. You know what I'm talking about. But in this case, I'm just looking at the pivots. So what would you do? Just let it do its thing. In this case, that's broken. So a trader could go long. Okay, a trader could go long. Okay, and when they bid against you, maybe stop you out. Okay, depending on where your stop was. So it was a little bit of a fake out. Now, in that process of becoming a fake out, notice a new low has been created, right? So now you have a proper range with a new high here and a new low there. And basically now, if it goes below that, you would short. If it goes above, you will go long. So again, all of these could be used for this type of purposes. You would go long, okay? Go long with a stop below and stopped out again. So you can see the weaknesses of using whatever technique without UFOs. But again, I'm just defining what many traders do actually. Okay, and by the way, the day you have a big move. Okay, so that pays. So then now you will have another pivot here. So that would be another potential breakout price point there. Okay, so now you would take the breakout to the short side. Okay, and in this case you were stopped out because it came back. So what a teaser. Okay, so that day you guys just forced stop out if you took all the trades. And again, this is the problem of not using the UFOs. Okay, but again, now another opportunity here for another breakout, another pivot. You get my point. The beauty is that the relevant turning points and therefore the pivots, okay, or what some technical analysts may call support or resistances out of pivots. So there would be, here we go, another breakout. Okay, and now the market closed. So that was the end of the story. So that would be a very poor day, to be honest. And fair enough, because it was a sideways congestion day. There would be other days where you do the same and it would be just an amazing day. Okay, just think about this day, for example, if we go back to here. Okay, so we go back to here. So trading day begins. Okay, a new pivot is created. You draw the line. Another pivot is created. You wait patiently. Okay, breakout, and look at that, huge move. Okay, so sometimes that would work. Many other times it wouldn't. But again, for the traders that use these type of techniques on how to trade, the beauty of the pivots, which is what we are discussing, is that it makes it totally objective. There is not much to think here. You know what the top is, you know what the bottom is. It's highlighted for you, and then of course you can play with the settings and the colors if that is more relevant to you. Okay. Questions about the pivots? Oh, and there is one more thing I wanted to mention before I take questions about the pivots. Let me go ahead and delete the lines. Okay, and there is one more application that could be very useful as well for pivots, which is we talked about trailing stops earlier. So, well, another way to kind of confirm if a trend is powerful and keeps going is to actually use the pivot tool. Okay, so let's say, for example, let's enable AutoUFOs. Okay, just to make it a bit more like the things that we normally do. Let me see. What was the example I was going to use? Yeah, but that's good. Okay, so let's pretend you're here. Okay, so price is falling. You have multiple UFOs there, and you're like, oh my god, I don't know which one to take as a profit. I know I want to take this as an entry. Okay, maybe you're looking at a Bollinger Band peers, you're looking at the climate. The climate is exhausted. I mean, a collection of different possibilities to define entries. Bottom line, whatever is it that you do, maybe you're looking at fibs, whatever. Bottom line, whatever you are doing, you are now arriving inside of a UFO and you want to take an entry with a stop on the top, an entry on the top, a stop in the bottom, and you expect the move to turn. Okay, but the problem is that you have all these red UFOs there, right? So if this comes here and turns, you may be concerned that, hey, this may turn and that's it, and this is the end of the story, which could very, very well be. But if a new climate is going to develop to the upside, those unfilled orders will tend to be canceled, and the price may react a little bit to those UFOs, but keeps going, right? So to measure and sense that reaction, the pivots can be very useful as well. And that could keep you in the trade for longer if you were to apply a rule such as what I'm about to define here. Again, all of this for you guys to be experienced, okay? Christian, I see your question there. I'm coming there. I'm coming to you in just a moment. Joe, same to you as well, coming back in just a moment. So let's say you got into this trade and that was a perfect entry, kissing the UFO and bouncing. Okay, and now the question is, okay, how long am I going to stay in the trade? So then what you would do is, I'm just going to wait for pivots to show up in the opposite direction, okay, and see if they're breaking or not. Okay, so price goes up. Here we go. A pivot shows up right here. Okay, so now that the pivot showed up, okay, no surprise where the UFO was. Okay, now the question is that pivot going to be traded through? If that's the case, this is a strong indication that the trend is strong or beginning to impulse. So then, even though there is a UFO, I may choose to ignore it and stay in the trade for longer. So let's see. In this case, well, actually, even in gap up, I mean, of course, we're looking at the S&P, so it trades 6.5 hours a day. So in this case, the next day was an up move. Okay, so yeah, indeed, that is telling you broke the pivot, stay in the trade. So now what do? Do the same. Just wait for another pivot to show up, and here's the pivot. Okay, here's the pivot. So it was traded through. So then stay in the trade. Another pivot shows up. Okay, another pivot shows up. So what do? Let's see if it's traded through. It's traded through. So stay in the trade. Another pivot showed up. Okay, so what do? Watch it. It's traded through. So stay in the trade. Another pivot showed up. Okay, this is a bit boring now. I'm just repeating myself too much. But that's what the market did. So keep going. Went through, so stay in the trade. Another pivot shows up. Okay. It was traded through. Okay. Another pivot shows up. another pivot shows up on the bottom part. It was traded through. Okay, because it was traded through, ignore that guy. Okay, so now we keep looking, another pivot shows up. Not traded through, another pivot shows up. So we draw the line. Was traded through, so ignore this guy. Okay, again, we're talking about a strong trend condition. So in these cases, it's quite easy. Sometimes you're gonna be more choppy, okay? But the technique is the same. So another pivot shows up. Traded through, sustain the trade. Another pivot showed up. Okay. Another pivot showed up right here below. And the one above was not traded through, and the one below just showed up. That's it. So now you're out. Okay, so here you would get out of the trade, and that would help you potentially to maximize your profits. There will be times where even though this happened, then it continues. Could be. Okay, it did. It continued, but at least you have a mechanical way on how to assess if you're gonna stay in the trade or you don't. And so on. So this could be more powerful, I would say, or more mechanical compared to the Parabolic SAR, because the Parabolic SAR has a subjective portion, which is the settings of the Parabolic SAR. Where here there is no settings. I mean, yeah, there is settings for the pivots, but this is something that you don't change from market to market or time frame to time frame. This is something that you leave like that forever once you have it adjusted. Where the Parabolic SAR, because basically it's the value you input, it's I'm not sure I said that before, the value you input is proportional to the price of the product you trade. For example, if you trade futures and ticks at 0.25, or you trade stocks and the minimum price increment is 0.01, so all of this needs to be customized with the Parabolic SAR. But here, no, it's not the case. So in this sense, it may be a technique that you appreciate more, or maybe not, because it's a bit more tedious as well. It requires more watching. The other thing is just watching dots. Okay, so pros and cons. But anyway, I wanted to discuss this with you guys so you know how to use it. You know how to input. You know how to vary the settings, which is again is right click, edit study, and you go back to pivot, and that's where you do your adjustments, and then that's it. You're ready to go with your technique. Please make sure you backtest all those things before you use it. Okay. Let me see your questions. Yes, Mark. Joe, the weaker are just turning points on lower time frames. No. The pivot points are in the same time frame, no matter if they are weak or medium or strong. They are in the same time frame that you are plotting. It's just that it's using less quantity of candles going back in time to identify the turning point. Okay. So it's the same time frame. Okay. Christian, if you click on a weak pivot with the speed bump tool, does that mean the speed bumps are less relevant? No, it doesn't mean it's less relevant, because the speed bump tool has other calculations built in that have to do with the Elliott wave and projections of waves and all sorts of things, which are way beyond what the pivots do. So what the pivots do. So to be honest, even if you click on a candle that doesn't have a pivot point, like for example, these sorry, I just clicked on the wrong one. So that little tiny turning point there that looks like a little bit of a bounce, but there is no arrow. So when you click on that, sorry, I just clicked on the wrong one. So when you click, not sure what's happening to me. Here we go. So when you click on that, notice how the projection was calculated very nicely for the turning point to take place again, but there was no arrow there. Okay, so the speed bump tool goes beyond what the pivot is trying to do. Having said that, when you apply the speed bump tool to candles that have a pivot, what you are doing is you are making yourself very mechanical on how you apply the pivot. The speed bump. Because if not, yeah, you could go ahead and just draw speed bumps in every single candle, and then you will be like, okay, so which one I use and why? So the beauty of the pivot is that it basically stops you from over trading. It gets you doing something that makes sense. It gets you mechanical throughout all the trades throughout your life and the whole year of trades. And again, it's all about producing that consistent action, and therefore I feel that it's probably the best way on how to apply the pivots. Again, the pivots, to apply the speed bumps, which is using the pivots. But you don't need to. You could, as you saw, you could actually apply it to any candle, no matter which candle. Okay, very nice, very cool. Okay, nice. So let's continue. Like riding the wave, exactly. So let's remove the lines, and we're gonna go ahead and complete our lesson for today by looking at two more studies, which is 2 in 1, the probability cone and the probability envelope. Okay, so the probability envelope, I'm just gonna click OK, and then I'll come back to this. The probability envelope is, let me go ahead, just 1 second, guys. Remove all studies. Okay, no UFOs. So add probability envelope. Oh, here I have a silly volatility. So let me do this. This, for example. Okay, I'll come back to explain what is this in a moment. Okay, so click OK. Okay, not sure why this is happening. Oh, yes, of course, because this is an intraday time frame. Sorry for that. Forgot to say the probability cone and the probability envelope can only be applied to daily time frames. Okay, that was my bad for not saying it before. That was the reason why the chart got distorted and we didn't see anything. But now you can see now that we have the probability cone. Okay, so we have the probability cone. Okay, so edit study. Sorry, the probability envelope. Okay, the cone. So what is the cone? The cone is multiple envelopes in one. So if, well, I have not explained what is this yet. If I go back to add study and I add cone, which is multiple envelopes, so, and I click OK. Okay, we'll look at the settings in a moment. So notice how whatever we had has been overlaid. Okay, so we still have the envelope, and then we have envelope 1, 2, 3, 4. That's the cone. Okay, those 4 guys are the cone, and the one on top is the envelope. Okay, but notice that they overlap each other, so that's why you don't see the purple line. Okay, so if I delete the cone, you will now see the purple line, which is the envelope. So you can see those 2 guys are still there. That's the envelope. Okay, so so in other words, the envelope is like the cone, or the cone is like multiple envelopes. Okay, that's what it is. Okay, so another question is, what's an envelope? And the reason why you have 2 versions, one with one line being plotted only versus the other one you got 4 lines being plotted, it's basically depending on how complete or complex you want to do your analysis of projected volatility, or how simple you want to keep it. Okay, anyway, let me delete and restart and explain this properly. So I kind of said it. The probability envelope and the probability cone, they are basically measuring expected volatility. So I want to start with the probability envelope, which is only 1. And when I insert it, so first thing, it says what type of volatility you want to project into the future. Do you want to project historical volatility? And if so, how many days? You want it to be the last 45-day volatility projected into the future? You want it to be the full 1 year of volatility? 252 trading days is 1 year of trading in an equity market. Do you want to project that into the future? Okay, let's say you want to do that. Okay, because you can also do implied volatility. You can also do a user setting. You can be like, okay, I think the market is going to move 10% in a year. So what does that mean? If the market is going to move 10% in a year, just project that into the future for me. That's user volatility. Let's say you are thinking, no, I want to project the implied volatility built in the puts real time, continuous implied volatility mean, which is the mean between the calls and the puts. So project that for me automatically. So it's going to take the real time implied volatility and project that into the future, expecting the price to move as suggested by the prices of options, which have volatility built in. It's called implied volatility. If you're an options trader, you know that by heart. Or maybe, as I said, historical volatility, coming back to historical, you also have the calls and the puts. I'll skip that. So you can also go back to historical, and historical basically means whatever speed of movement the stock had in the past, in the last 30 days, or in the last full year, or in the last whatever, 42 days, which is 2 months. So whatever amount of speed of movement that stock had in the past, project that into the future. That's what this is. So if we were to project the real speed of movement of the S&P during the last 1 year into the future, this is what you get. And the vertical lines represent expiration dates. So if you were to look at January 3, 2022, which I just picked randomly, if I put my mouse there in January 3, 2022, it's telling me that the highest you would go is 489, the lowest you would go is 452, if the stock was to behave like it has behaved in the last 1 year. And by the way, very important note I need to add, this is not a guarantee. This is a one standard deviation of the cases, which basically engulfs around 68 point something percent of the cases. So in 68% of the cases, that stock from now until January 3 should be trading between 489 to 452 if that stock continues behaving the way it's behaved in the last 1 year of trading when it comes to speed of price movement. That's what this is doing to you. If instead of looking at January 3, you look at January 18, so then the range is 494 to 447, meaning that in a one standard deviation of the cases, you would be between those two prices, assuming that stock will remain behaving the way it's behaved during the last 1 year when it comes to speed of price movement. Now, what if you want to be a bit more relaxed or more extreme when it comes to probabilities? Because here by default, you have 68.26%, which is one standard deviation, which is what I have. But what if you tell me, no, wait a minute, I want to know in the case of two standard deviation, which is roughly 95 point something percent. So let's call it 95%. So I want to know if that stock remains behaving the way it's behaved in the last 1 year. I want to know where price is going to be either above or below in 95% of the cases, okay, assuming a normal distribution of price, which means anything could happen anytime based on the speed of movement that happened before. So if that was to be the case, and now we go back to, let's say, January 3, so now, of course, it's going to be 508 to 434, which is a way wider range. Why? Because instead of 60% of the cases, now you are engulfing 95% of the cases, okay? Again, rounding decimal places there. So this is what this tool is doing. And why would you do this? Well, this is a great way to plan for realistic targets. So let's say, for example, you get into a trade with an option contract that expires in 2 weeks, and you tell me that in 2 weeks, you're going to reach 500. That's your target, okay? Well, 2 weeks from now, given the fact that the current date on the screen is 12/10, 2 weeks from now would be 12/23, okay? It should be 25, but it's a holiday, it's Christmas. So 12/23, that would be the date. So the date on 12/23 means that in two standard deviation of the cases, okay, you will reach 498. So in other words, it's extremely unlikely. You only have 5% probability of reaching your target at 500, which is above 498. Okay, so this could be a interesting way to project targets and realize if those targets are realistic or not from a time to target calculation point of view. Another application of this tool is to utilize this tool for non-directional trading, which is okay. Let's say I want to do an Aron Condor, I want to sell calls above, I want to sell puts below. I want to sell them in a way where they are out of the money and they stay out of the money all the way until expiration. Expiration is 12/27. Let's say you pick that date. So of course you want your calls to be sold above this. You want your puts to be sold below that. So if that stock indeed based on probabilities remain, that was lack of precision there. But if that stock remains, somewhere wherever it is, but it didn't reach that point on that expiration date, so then you would have a full profit on those non-directional trades. So another way to use this tool is to project ranges. Would you see me that all the time? Okay. But now when I do that, okay. So let me kill the probability envelope now, and now let me add the probability cone, which is like the envelope, but we got 4. Okay, so I'm going to add the cone. And notice we have envelope 1, 2, 3, 4. So it's the same thing. Okay. So so what we could do here is, I mean, the way I have it set up, I'll come back to see those values in a moment. Okay. But basically, the one thing that we can do here when you do that is now to assess those statistical ranges. Going back to 1227, you are assessing those statistical ranges not only based on calculations of historic volatility. My blue lines are historic volatility, but in this case is 1 month, in this case is 3 months, in this case is 2 months. How do I know that? Because of the color nomenclature I use, the color convention. So the lighter is the shorter time, the darker is the longer time. I got 1 month, 2 months, 3 months historic volatility, but also I got red color implied volatility. So based on implied volatility and 3 different historical volatilities, 1 month, 2 months, 3 months, I get to assess what's likely to happen based on statistics, which in this case, it would be to be trading between 491 and 450, which is the light color, which is the one which is located at the furthest extreme. Okay, so that is a very useful application now. Instead of having to insert the indicator 4 times, so you insert the indicator once. Okay, it's called the probability cone instead of the probability envelope. It's the same thing, but now you are plotting multiple things in one, which is indeed pretty handy. Okay. Now, before we conclude the session, I want to give you a few extra notes about the settings I use, just so I get you thinking, so you can practice your settings as well. So first of all, I don't use 2 standard deviations. I use 1, 68%. Okay, why? Because if you use 2, of course, you have so much more probability, but the market is intelligent. Okay, in other words, the market is not stupid. Sorry for using a strong word. And if you sell options that are way too far, way too far, because it's so likely that you will profit with them, well, again, you're gonna be able to sell them for extremely little premium. You may get paid 5 cents to do that, and what's the point? Because then you only make 5 cents, and if you get hurt, then you lose hundreds per contract or more, depending on the strikes you use. So having too great of a probability measurement here, of course, gives you more odds on the chart, but gives you less premium on the options. Okay, and therefore, to me, it's a balancing act, and I'm very happy using 1 standard deviation. Some of you may conservative, maybe more conservative. You may want to try 1.5 or 2, but you will be disappointed in many cases. I will tell you that, even though, of course, go ahead and try so you know what it is. Then, again, 63 days is 3 months, 42 days is 2 months, 21 days, 1 month, which is what I said before. And then for the continuous implied volatility, okay, I use red color. Okay, those are the settings I use. Okay, and one last thing I would like to mention about this tool is well, you could actually display labels. I don't use it because it gets very busy on the screen, but when you display labels, basically you get all those values displayed there. Okay, so instead of having to look at the values here, you can just see it on the screen. But unless you really widen the size of your candles, it's going to be too busy. So that's why I don't use it, but it's available. You can also hide weekly options if you were not to use them. I would not be able to think of an application that makes too much sense if you trade liquid markets. But again, there may be cases where it makes sense. So the option is there. And then the last one I would like to mention is the calculation date, which by default, it comes as follow last price. So when you insert, it's located on the last candle. But it doesn't need to be like that. Okay, you can actually use a prior date, or instead of manually selecting a date, you can just go ahead and drag it. So you can grab it, and now that I have it, I can drag it here. Okay, I can drag it here. Okay, so this, by the way, could also be an interesting way on how to measure when you expect a market to turn. For example, going back to pivots, right? So you could apply your pivots, okay? And you could come in here, okay? Whenever you had a pivot, okay? So for example, here, that candle has a pivot. So you plot this here, okay? And whenever the market is going below that, this was not predictable based on probabilities. Now, in this case, it's only 1 standard deviation, so I'm not too surprised. If you were to look at this as a let's say a dynamic intelligent type of Bollinger Band, if you wish. So what you could do is you could make this to be 2 standard deviations, plot it on one of those candles with a pivot, okay? And now it's going to be very rare, but anytime you pierce that, potentially you have a turning point. So again, I guess you are with me. If now you activate the UFOs and now you go back in time to that day, okay? Well, there was no UFO there in that time frame, and when price went below, there was no UFO either. So then, there was not a great advantage there. But I'm telling you, there will be times, okay? So for example, if we go to the prior one, okay, here we go, right? And well, that's going to be about the same. So there will be cases, again, it's not going to happen often, but it's one of those pretty extreme situations. So every time you got price going through, because it's extreme, it's not going to happen too often. That's self-explanatory. So again, in this case, we don't have a UFO down below here, so you will not be able to buy. But every time you had one of those pierces, so it could indicate the market is very, very tired towards either the bottom or the upper part, and you are likely going to end there. Another application of this, and this is the last one, and I'll stop it here, guys, is when the market starts making all-time high. So this was an all-time high situation. Okay, this was an all-time high situation. So when the market, pierces that all-time high, okay, like it did, and then the question is, where do I take profits? Okay, so as long as you are not reaching the upper part of this, you don't need to take profits. Okay, and it's moving within what's supposed to do. Okay, so there will be other cases, like for example here. Okay, well, still not. Okay, so the market is still traveling within what probabilities would suggest is it was going to be based on that projection into the future. So this is also a way. I show you the bottom part. The upper part can also work for profit taking or shorting if you want to enter shorts. And again, this is one way on how to measure extreme conditions. For profit taking, by the way, last comment before we finish. For profit taking, the case I showed you earlier when I went to change the 1 standard deviation to 2 was for entries. For profit taking, you may want to be less aggressive, and maybe 1 standard deviation would make you a little bit more on the safe side of not missing targets. So you can just make it 1 standard deviation, and notice that in this case now you are hitting that more often, which allows you to still maximize a decent profit, and then potentially somewhere here re-enter and then get out again. But the point was, coming back to the cone, is applying the code to the pivot is, which is a significant candle, and project from there, and then deduct either if you reach there, do I want to take profits, or do you want to enter a trade in the opposite direction, which depends on having UFOs or not, having used a 1 standard deviation or 1.5 or 2 standard deviations on the calculation, meaning that the market is very exhausted or not that exhausted. So all of those things are, again, to be defined based on the context of a trading plan. But hopefully this session is giving you ideas of things that could be useful, interesting, powerful for traders, but also not only that, also how to use it with top, which is one of the key elements of our top sessions. Of course, is that you guys master the use of the platform, because as you can see, the options are infinite, and it's important you understand your options, so you end up with a very concrete, specific trading plan written that you follow religiously, or maybe you have more than one, but you follow them independently, religiously, with no exception, with discipline and management of your emotions. Okay. Anyway, so from my end, I'm done. I'd like to know how is it going on your end, my friends. Let me know if all was good or not, if you have questions or not, and depending on your answers on the chat box, we will call it a day or not until I give you those answers, and that way, we will be happy and proud that we have completed all this upper section with all these powerful tools that work as an overlay. So let me know about that. I'll take a sip of water. Thank you for that, Joe. Thank you for that, Mark. Christian, thank you very much as well. Need to practice like everything. And again, guys, something that is important for me to say, and I'm sure it's not the first time I said it, I'm sure it's not going to be the last one as well, is that keep it simple, okay? So the platform has infinite possibilities, but it doesn't mean that for you to be a good trader, you need to just have this crazy trading plan where you need to check at every single of the tools that we are discussing before you take a trade. It's not the case. This is not how trading should be, okay? The reason why there are many tools is because every trader is different. Every trader has a different personality. Every trader has different preferences, account size. Again, and having many tools, basically, bottom line, allows you to fine-tune and adapt your trading actions to who are you as a trader. So my purpose here in those sessions is to get you well exposed. My concern in the back of my mind is that maybe some of you that are in the process of building a plan or don't have a plan yet may get a bit overexcited about the power of top and all the amazing magic things that we can do. And next thing you know, you basically mix it up, put it in a, kind of like, make a cocktail out of it, right? And it's all mixed up down in your, and you don't have a trading plan which is written with rules. And every time you trade, you have so many things to check, and you are improvising, going from tool to tool, and that would potentially be very problematic for you. So make sure that, as Christian have said, you put time for practice, okay? So you understand the tools, the ones you want to use, the ones you don't want to use. And then when you want to use them, make sure you use them in the concept of a series of tools. So, you are a mechanical trader with discipline and management of emotions, as I said millions of times, okay? And make sure that is understood. In any case, my friends, very happy to conduct the session. As always, very happy that you guys came and joined me on a weekend. So thank you for your passion and being part of our community, and for being so kind and so devoted to trading and what we do, guys. So thanks a lot. Keep up the good work, and anything you need, guys, just make sure you are in touch. As always, we're here for you guys. All of this would not make sense if you guys were not on the other side. So make sure that you count on us, and also team up between you guys, okay? Because it's all about community partnerships, not being isolated, okay? So team up and be part of it, okay? We had, by the way, the request a few times of trying to set up some sort of a technological solution to help you guys actually to meet, to get together, and so on. And I want to share here that we are revamping our website. We are doing things. So not sure exactly how long it's going to take, but we are on it. So hopefully not too long from now, I'll be able to share good news in that sense as well. And always listening to you guys, okay? The day got 24 hours, so the limited time is something that affects us all, but indeed 100% committed to you guys. So count on us and keep up the good work. See you soon. Take care, my friends. Bye-bye.